Vice President Yemi Osinbajo launches Bank of Industry's Aid for Productivity report on advance rent. NLC backs monthly rent in Abuja. Securities and Exchange Commission and National Assembly to tackle proliferation of illegal investment outfits. Plus, all opens weak elevation on outlook for stronger global demand. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar. It's good to have you join me. Now, let's begin by telling you that the Vice President Yemi Osinbajo has launched the Bank of Industry's growth platform, a nationwide infrastructure with a vision for sustainable economic growth in emerging markets by empowering MSMEs with capital, skills, and critical resources. Benny Adams reports that the BOI's growth platform's portfolio of funding has given credits and grants to more than 4 million businesses across 7 programs amounting to more than $400 million and plans to bring on board 25 million MSMEs beneficiaries by 2025.
The Nigerian financial institutions, technology companies, service providers, and program partners who have given the best of their expertise to this work over the years, we applaud you, and we thank you also for the commitment that has enabled this growth platform, not just to be built, but to thrive the way that it's been thriving.
After this particular growth platform, we have developed other platforms too. We have another one developed to handle the MSME Survivor Fund, through which other government programs like the payroll support, artisans and transport support, guaranteed offtake scheme, and the export expansion facility.
The Central Bank of Nigeria has introduced an electronic invoice for imports and exports of goods. A circular released by the Apex Bank said the issuance of the e-invoice is to begin February 1st, 2022. The circular, signed by CBN Director in charge of Trade and Exchange Department, explained that no importer-exporter may effect payment to the credit of any foreign supply unless the electronic invoice has been authenticated by authorized dealer banks presented together with the relevant document for payments. The introduction of e-valuator and e-invoice replaces hard copy final invoice as part of the documentation required for all import and export transactions. It said that the supplier-seller's invoice must be submitted in electronic format and authenticated by authorized dealer bank as part of the documentation for payment. President Muhammadu Buhari is advocating a UK-Africa Union free trade deal that will revive intra-trade among the Commonwealth countries for improved economic development of Africa. Benny Adams takes us through the President's aspirations for a prosperous Africa.
African nations have for so many years been into economic partnership with Europe, entering into bilateral agreements that seem lopsided as Europe erects high tariff barriers to goods manufactured and processed in Africa, thereby stunting job creation among other trade policies intended to benefit just Europe. President Muhammadu Buhari believes this trend can change, with the United Kingdom becoming the first country in the world to sign a memorandum with the African Union's 54-country continental free trade area.
The Memorandum of Understanding falls into two broad areas of the Afcfta, namely trade in goods, and in particular customs cooperation, transit, and trade facilitation. It also falls in the category of other areas of our work, including facilitating investment promotion in Africa through the use of the Afcfta as a tool and a catalyst for investment.
Meaning that this singular action should lead to a UK-Africa Union free trade deal, one made with parity, considering Africa's $3 trillion combined GDP, which is equivalent to that of the United Kingdom, the world's fifth largest economy.
And the whole operation provides a tidy return for investors both in Nigeria and in the UK. And it's a great example of what the modern UK-Africa partnership looks like. An exchange of ideas, equipment and finance to solve common problems. A relationship that benefits us all and makes a lasting difference.
More to this is the fact that 19 Commonwealth nations laws are built on the principles of English jurisprudence, which the President sees as a common platform from which to better align regulations on investment and certification.
Our location, our natural resources, our population, and our regulations are there for all to see. Nigeria on its way to becoming a leading industrial and trading nation in Africa.
President Buhari is also of the view that African unity will give opportunity to Britain to practice the free trade it has always preached, which he expressed optimism that it will lead to job creation in Africa as an advantage and not a threat to the Western world. 2 years after the United Kingdom's departure from the European Union, President Buhari, on behalf of Africa, seeks a new settlement with Britain, one based on cooperation in fairer and freer trade. He concludes with the optimism that, being the first mover amongst the G7 to seek a trade deal with Africa, the UK is positioning itself to secure the very best of terms and stands able to revive intra-Commonwealth trade, replenish its relations with the fastest growing market in the world, as well as tackle the causes of economic migration and create jobs and wealth that boost rather than threaten those at home. In Abuja, Benny Adams, and
1 year after the implementation of the African Continental Free Trade Area Agreement, Afcfta, which came into force in January 1st, 2021, most African countries continue to lag behind in making the trade agreement operational, some owing to structural challenges, coronavirus pandemic, and lack of consensus on the trade protocols and strategy among stakeholders. Despite the ratification of the trade deal among African countries, with exception of Eritrea, the political will to implement the deal remains in doubt, going by the pace and protectionist stance of many African governments, thereby losing opportunities of enjoying projected income through tariffs on sensitive products, as some of the products will have to be liberalized within the 10-year period agreed in the deal. Joining me to discuss progress and prospects of the Afcfta in the new year is the CEO, Ghana Investment Promotion Council, Yofi Grant. He joins me from Toronto, Canada. It is good morning, or is it, good morning, Toronto, and good afternoon, Nigeria. You're welcome to Business Express.
Yes. Indeed, it is. Yes, it's good morning, Toronto, and good afternoon, Abuja. And you have touched on a very interesting subject of how Africa can optimize its opportunities beyond what it has in the past.
Okay. Now let's begin. It is 1 year on. How would you describe the implementation of the Afcfta on the continent, and also share with us the Ghana experience, as Ghana is the Secretariat?
Well, yes, I admit that maybe we have had very optimistic views that have not been executed in the speed at which we want it to be. But you must also recognize that it's not a very simple process of just saying, okay, we have one common market, we are removing tariffs, and some of these tariffs have to be negotiated between countries and between the AFCFTA, and that takes time. And we must also admit that not all countries are the same level of economic development or have the same vision of moving forward. Though we all recognize that this is Africa's biggest chance of optimizing its opportunities in the global economy, but also on a country by country basis where we can all participate in this economy tariff free. But with negotiated terms, there are still quite a number of things to move out of the way. Africa still remains not as connected as it should be. We need roads, we need railways, and we need a huge, infrastructure investment to ensure that goods and services can move unencumbered and can actually optimize this great opportunity. As it is, the continent still remains the most resource-rich continent in the world and has a very attractive population with its demography, where about 60% of the current 1.3 trillion are below the age of 35 years, and therefore that's the market just simply waiting to happen. And I believe that with the AFCFTA, if we are all to agree that this is the way forward, and also latching on the Ghana example, which is a Ghana beyond aid, where we do not want to build our economy on aid from developed countries, but within the resources that we have and the people, and then in partnership with those who have our interests at heart. So I believe that, first of all, we must agree that this is not negotiable. We will go forward with it, and it still stands as the most important development on the continent since we all started seeking independence from the 1950s throughout. But like I said, it's going to take time to fully implement it. And I can give you examples globally where such engagements have taken time, and the EU is one. It took more than 50 years to be able to implement the EU, and even post that, we are seeing fractionation in the EU. But I think Africa's case is totally different. We have the population size, and you know that economies together, we are able to have convening power. And as you just showed, the AFCFTA signed an agreement with the UK government about the same economic size. So under the AFCFTA, we do have convening power. And in a unit by unit country side, we do not have that. And so it's without doubt that it's going to happen. The execution is going to take time, and it's going to take step by step. I've given you some of the issues that we have, that we need infrastructure. We need to also have a lot of regulatory reform to ensure safety of investment and also respect sanctity of nation. And
Ghana made the bold step to become first to make exports to this market. Tell us how it happened.
Well, of course. I mean, we under Ghana's economic, should I say, directions, we ourselves, we are trying to industrialize. But we do have some countries that, some companies that are in production that have global appeal, but have African appeal. And so we had quite two of them that took the first step to export to Southern Africa and to Eastern Africa, and very successfully. The issue is that even among countries, I think there is a lack of clarity in the private sector on what the rules of engagement are. For example, if you want to export to Angola, or you want to export to South Africa, or you want to export to Tunisia, Egypt, or Ethiopia, or Gambia, or Nigeria, what are the protocols, and how do they actually how do you actualize them to make sure that you have an unencumbered process of being able to export freely or import freely? And remember, it's goods and services. And so we need to understand clearly and come to a common understanding through that we're going to make it happen. And I believe it will happen. Sometimes countries are a bit hesitant because they're not sure what the implications are to their own local economies. But this is a no-brainer. I mean, Ghana is resource-rich. Nigeria is resource-rich. Some of the countries in Africa have taken the step in industrialization. What stops Ghana from exporting rubber to South Africa to make tires for the automobile industry? What makes Nigeria, which is now doing a lot of rice cultivation now look at Ghana as a market, so we don't have to go to other countries outside the continent. What makes it possible for us to be able to, exploit our bauxite deposits across the continent to build a mega aluminium industry on the continent to supply the continent. So all these possibilities are there, and we've shown that it can work. It does work, and we've had countries that are already exporting to the continent, and we are looking for more. We've recently had engagements on a country-by-country basis. Nigeria is close to Ghana's heart because it also gives us a good market for our products as much as it gives us capital as well. We have had engagements with Rwanda. We have had significant engagement with South Africa, Morocco. And so even within the framework of AFCFTA, some countries are taking the step forward. And it's important that we recognize that.
Okay.
But it's just not the intra-country trade that is important, but intracontinental investment is also key.
Okay.
It's also very key to make this happen.
Okay, now beyond local challenges, disruptions of global supply chains due to coronavirus restrictions in 2022 limited by AFCFTA's potential as manufacturers across the continent suffered access to raw materials and access to existing market, forcing them to look inward and explore newer trade routes. What else is standing in the way of these markets?
Well, I suspect that even on the case that you're mentioning, Africa does not have as big a problem as many other places in the world. And if you look at what's happening, the bigger problems are some of the issues that we have to do with globally, like the COVID pandemic, where there's been a bit of vaccine politics and even disease politics, and these have lent themselves to all sorts of sanctions, etc., which need not be. That despite these, we can still work together. And if you recall, we had President Ramaphosa actually come to Ghana whilst South Africans were being barred from other developed countries. And it was a very successful meeting, and it's going to inure to the benefit of the continent. And so some of these things are there. We still have problems with travel, and so it's easier to travel to Europe than it is to travel within the continent, despite having a free skies policy. So those are some of the issues that need to be eliminated. But the important thing is to recognize that 3.5 trillion economy that we have in Africa today can immensely have a multiplier effect if we work with ourselves and within ourselves to optimize the opportunities we have. Africa is still resource rich.
Okay, back to what you said on intra-African trade. Current on-tap export potential of intra-African trade is $21.9 billion, says UN Conference on Trade and Development, Economic Development. So, African report says Africa report in 2021, of course. Should that be a source of concern?
Well, no, it should be a source of information for us to act on, much more than concern, that we believe that we can do much more than that. And of course, I mean, Africa needs to tell its own story. I think we are past the point where we now have other agencies tell our story. We need to tell our own story. We need to do our own analysis. We need to do our own economics and look at the benefits that we can derive from that, and not always rely on outsiders who tell us this is what you can do or this is what you can't do, because we know we can do it. And that is why our president's maxim of a Ghana beyond aid speaks volumes and actually sets the pace for the continent. I believe that we might have a bigger export potential than that 21 billion that has been said. By even just doing raw materials to each other or finished products to each other. I think the opportunity and the potential is much bigger than that.
Well, thank you very much, Yofi Grant. Thank you very much.
You're welcome.
Okay. Now let's take a trip to the commodities market. investors in Nigerian equities market gained about 809 billion naira in the trading weekend ended Friday, January 21st, January 2020. To Muplanda has details.
It was a week of gains last week as total turnover of 1.8 billion shares worth 47.4 billion naira in 20,861 deals were traded by investors on the floor of the Nigerian exchange. The NGX All-Share Index appreciated by 3.38% to close the week at 45,957.35, with market capitalization rising to 24.7 trillion naira. All other indices finished higher with the exception of the NGX Insurance Index, which depreciated by 0.27%, while the NGX ASM and NGX Sovereign Bond indices closed flat. The financial services industry led the activity chart with 815.3 million shares valued at 7 billion naira traded in 10,736 deals. The ICT industry followed with 596.5 million shares, while the third place was occupied by the conglomerates industry. Trading in the top three equities, namely Computer Warehouse Group, Transnational Corporation of Nigeria, and FBN Holdings, accounted for 810.7 million shares worth 2 billion naira in 1,499 deals. A total of 28,084 units of exchange-traded products valued at 18.3 million naira were traded in the week in 27 deals. Also traded were 2,290 units of federal government bonds valued at 2.291 million naira. 47 equities appreciated in price in the week, higher than 33 equities in the previous week.
And our stocks in Nigeria began the week in the red after recording marginal losses after Monday's session. At the close of trade, the all-share index slipped to 45,928.27 points. 278.6 million shares exchanged hands in 4,447 deals, valued at 2.887 billion naira. Equity capitalization ended the day at 24.7 trillion naira. Champs PLC, UBA, and Cotville were the most active stocks. Next is Global Market Review with Inekalko.
Hello and welcome to the Global Market Review. Stocks across the world fell on Monday as the prospect of a Russian attack on Ukraine pushed demand for riskier assets, strengthening the dollar, lifting oil, and bruising Bitcoin. In Asia, markets traded mixed as investors looked ahead to the U.S. Federal Reserve's monetary policy meeting this week. Japan's Nikkei 225 erased earlier losses and rose 0.24% to 27,588.37. The Shanghai Composite was flat around 3,524.10, while Hong Kong's Hang Seng Index dropped 1.24%. European stocks were also lower as investors braced themselves for the next meeting of the U.S. Federal Reserve and watched for developments in Ukraine as tensions with Russia grew. Germany's DAX fell 1.15%, London's FTSE depreciated by 0.68%, and France's CAC 40 also dropped 1.47% to lead losses. U.S. stock futures rose in early trading following the S&P's worst week since March 2020. Futures on the Dow Jones Industrial Average edged up 94 points, S&P 500 appreciated by 0.35%, and Nasdaq Composite rose 0.34%. Markets like their Asian and European counterparts tumbled in Monday's trade. South Africa's JSE Africa Top 40 fell by 1.24%. Namibia's overall index also dipped 0.11%, and Tunisia's Tunidex dropped 0.41%, while Kenya and Ghana were both flat. And that's Global Market Review. I am Neka Oko.
Well, that's it. This is where we end Business Express today. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. Business Express returns Tuesday at 9:30 a.m. Please join us then. I am Salvoka.